Hey, this is Ali from FX Order Flow channel, and in this video I'm going to show you guys how I made a beautiful trade on the S&P 500 using level 2 data. This trade was taken on August 19 and it was on the S&P 500. This is 1 minute candles on S&P 500 and this candle is NYC open for S&P 500. So as you can see, when the market opened, we dropped hard and we had a huge amount of sales, but we had some minor absorptions down here. And right after buyers entered the market, so if you were looking for a scalp trade, you could buy on the retest. I didn't enter here because I don't trade scalping. So this is my entry here. I got activated around here. I'm going to show you guys later on. I'm going to show you guys on CFD my entry point. But right now I want to analyze the trade for you guys. So let me show you guys what is the location on hourly chart. So the location on hourly chart is around here. I got activated a little bit higher up here. So we had a point of control for the previous day, and also we had a NY and daily value area high for the previous day. Although we had a range day, but a lot of orders got activated here, and we had a huge amount of volumes on previous days. So sometimes range when we are ranging on previous day, the volume areas for me are not like that important, but when the volumes of the previous day are like high, I do care about them, and this was one of them. So the value area line was somewhere around here. We went above it, and right after that, as you can see, we had a huge amount of buy orders, but the market didn't push any higher. Even on the next candle, even though we had again huge amount of buys, the candle closed bearish. This is a really easy sign that a passive seller is blocking sell orders, buy orders, and I was just waiting for a seller to enter the game, and this candle entered the game. So I got into the position. I don't remember exactly on which candle, but I'm going to show you guys on CFD later. Somewhere around here, I entered my sell, and when the market pushed around here, I moved my stop loss to break even. I didn't have any partial closes for this position because I was pretty much bearish on the S&P 500 after PPI data, and also the amount of sellers that entered the game right after this really easy sign of passive sellers. It was pretty much obvious that it's going to drop hard. So, and we dropped hard. We really dropped hard. My exit point was under survival ratio of 5, almost 5. The stop loss for the last position was around 8 pips. So if I want to show you guys how it looked like, so I entered like around here, and 8 pips would be like that. So my entry point was here, and the stop was also above there. So after we hit like 44 pips, 43, 44 pips, I trade my stop loss because I was getting closer to my TP. I trade my stop loss around, let me show you guys on the 1 minute chart, around here. We were hitting, we were getting closer to my TP, also getting closer to an area. We had some minor absorptions, and then buyers entered the game. It was not a strong buy. I could wait a little bit more higher, a little bit more, but I traded around here and got out with exactly this candle. And eventually it dropped a little bit lower and then pushed higher and then lower. But again, on the next day, we went a little bit higher on the market close before the day ends. Next day, we also had correction. The risk reward ratio for this trade was fine for me. 5 is a lot. So imagine if you're risking 1%, you get 5% in a trade. Almost 5. It was like 4.9, but you could say almost 5. So the market dropped hard, but I knew there's a chance that we might correct some of the movement. So I didn't want to risk holding more. I just trailed it. If it goes, it goes. If it's not, you still get a good amount of profit on a trade. So that's why I trade my stop loss, and I eventually got hit and got out of the trade with a really good risk reward ratio. So as you can see, using level 2 data and order flow gives you advantage on market. Two advantages actually. The first one, and the most important one, is that it's so much easier for you to spot reversal points. Uh, if you're not seeing volumes, it's like fighting in a ring while you are blindfolded. But if you're exactly seeing the live market, how much volume is getting exerted in daily candles, in weekly candles, in hourly candles, in 1 minute candles, you have a really better chance at finding reversal points. If you already have a strategy using like price action at finding reversal points, you know that the win rate for that is not that high, especially if you're taking like high risk reward ratios. But if you're using like volume trading, even though if you still want to use your price action strategy, if you see the volumes, you can get better confirmations. And then the second advantage, if you're using volumes in your uh, trading plan, is that you get really tight stop losses. Making a trade on the S&P 500 with like 5 or 8 pips of stop loss and then get a 40 pip movement is not easy. It's not easy at all. If you're familiar with trading, you know that it's really really hard to do such a thing. And with this strategy, you're getting these kind of trades regularly, like it's normal, but it's not. So that's the advantage of trading with volumes and level 2 data that gives you. I'm going to show you guys the CFD in a minute. So as you can see guys, this is the S&P 500 on 1 minute candle, and this is the location that I entered, and these candles are the block buy block orders up there, and this is the candle that knocked me out down here. I traded here, so we got here and then I traded here, and then I got knocked out. If you want to participate on online courses and also live trades, contact me in Telegram.